Hi, everyone. Thank you very much for coming here. My name's Elena. We want to give a big thank you to Yelp for hosting this event. This is their new office. Many of you have maybe been to their other office for one of our events previously. So just want to have someone from Yelp say a couple of words.
Hi, everyone. So my name is Jen. I'm a back-end engineer at Yelp. I've been here for about 2.5 years. Well, not here in our old office, and I guess just quickly wanted to say two things. And the first one is, yes, welcome to our new office. We moved in here a month ago, so it's still like sparkly and exciting to us, and we hope you guys like this too. And secondly, and I have to say this, but we are hiring. One reason we moved in here was we ran out of space in the old building. So we're looking for back-end engineers, front-end engineers, data scientists, product managers, you name it. So if you're in the market or you know anyone who's in the market, just go on our website. Thank you.
Great. So we have a wonderful panel of speakers here today, but I just want to say a couple words about Women Who Code. Some of you are very familiar. We have a lot of organizers here today. I'd love for people who are organizers or core team members to kind of stand up so we can give you a big thank you for all the work that you do. So Women Who Code is a completely volunteer organization, and we have 5 technical events per week. We're close to 4,000 members now here in the Bay Area, and we've been expanding nationally quickly. So if you know someone who would like to get Women Who Code started in another city, please let one of myself or one of the other women who stood up today know. And at that, I'll let Rose take it over.
Hi, everyone. Thanks again for making it out tonight to our venture capital panel. So we're going to discuss a couple things tonight, mainly focused on what the investment process looks like for VCs, getting a sense of current market trends, and then hopefully getting some great advice from our fantastic panelists here with us. If you have any questions, actually, please don't forget them and just wait till the end of our discussion. We're going to have a Q&A with the audience at that point. So again, I'm Rose, and as a bit about myself, I started out my career in investment banking, doing mergers and acquisitions, and most recently was a hedge fund investor out in New York City, covering the consumer and technology spaces. I love to travel, and I've been to over 30 different countries. And on that, our investors are actually going to introduce themselves. So Trey, would you like to start off?
Sure, I'm Trey Vassallo. I'm a partner at Kleiner Perkins. I think you're going to be inundated by, by KP folks. A little bit about my history. So I actually studied mechanical engineering at Stanford. I got a bachelor's and a master's. And I did embedded systems. So coding and robotics is something that I'm super, super passionate about. I ended up working at IDEO, where I actually designed some consumer products for a while, then went back to business school and became an entrepreneur. I co-founded a company called Good Technology, which was an incredible experience to go through, and then ended up on the investing side of the world, and I've been a KP for the last 10 years now, which is kind of crazy. My focus at Kleiner has morphed over the years, but right now is really focused on this whole emerging area of connected devices, which is really about bringing the power of the internet kind of beyond the screen and into the physical things in our lives. So things like Dropcam, things like Nest. And so that's what I'm really passionate about. I'm also a mother of 3 kids, and I've got 2 daughters, one of which I dragged here tonight because I'm super passionate about inspiring girls in technology. So anyway, with that, I'll hand it over to Megan.
Hi, my name's Megan Quinn. I'm also a partner at Kleiner Perkins. I joined Kleiner about a year ago. Before that, I was at Square, the payments company, where I led the product organization across hardware and software. And before that, I was at Google for about 7.5 years, largely focused on product development for maps. Before Google, I was having a lot of fun in college, and I highly recommend that if you are considering alternatives. But I did drop out my senior year at the urging, actually the insistence of my parents to go to Google about 6 months before the IPO, which turns out they knew better than I did because I thought I was going to Miramax to serve coffee to somebody. At Kleiner, I focus on consumer investments. I like to tell people that I really like rainbows and unicorns and butterflies, which is like, oh, you're not making any money, but you've got a great app, it's beautiful, like that's right up my alley. It remains to be seen how my partners feel about that. But, really anything mobile. And we'll talk a little bit more about trends, I think, in a bit. But I'm a huge supporter of the organization and many other organizations like this. I'm actually the middle of 5 girls. I have 4 sisters, no brothers. I got really lucky. And suffice to say, none of us actually ended up majoring in computer science. But the reason I went to Google was because Marissa was one of my TAs in a computer science class. So there's a lot of background there. And now I'm thrilled to introduce you to my other partner, Aileen.
I know you are getting a little KP overwhelmed tonight. My name is Aileen Lee, and I started working at Kleiner Perkins in 1999, so a while ago. But actually a year ago, with the support of my partners, I kind of spun out to start a seed stage focused fund called Cowboy Ventures. And actually Heidi is one of the people that I first met, and she was kind enough to kind of go for walks with me when I started at Kleiner to kind of teach me the ropes, which is awesome. And so at Cowboy, we're a tiny firm. It's a $40 million fund, and we just focus on investing in what I call across-the-board internet software. So it's mostly consumer internet applications, web and mobile, but also enterprise. So we do everything from analytics and infrastructure to consumer electronics, mobile apps, content, and commerce. And at Kleiner, I worked on a bunch of different kinds of companies, media, green tech, and then probably the last 3 or 4 years I was there mostly on consumer internet. I went to MIT, so I've always kind of grew up with a love of both business and technology, but I was a terrible programmer. And I think if women who code had been around, maybe I would have gotten better grades rather than just like passing and graduating. And I'm also the mom of 3, 2 of which are daughters, so I'm super excited to have the chance to hopefully make them really confident, technology-competent people.
Wow, this is very intimidating. All these Kleiner people. Although I have Kleiner trivia for you guys. I don't know if you probably know this, but you guys probably don't know this. But Ted Schlein's first job in Silicon Valley, before he even graduated from college, was working for me. So I have some incriminating photographs. If any of you need those.
Heidi is like a pioneer on many dimensions.
Well, you know, when it comes to Teddy, watch out. So, it's a great claim to fame. But anyway, my name's Heidi. I'm a Silicon Valley native. I started a software company with my brother, who was the coder, and I was just everything else. And ran that for 14 years, and then joined, I was at Apple for a year as VP of Worldwide Developer Relations, where it was my job to take care of the whole developer community. And then I became a venture capitalist. So I've been a venture capitalist since 1999. First with a fund called Mobius, and I'm now with DFJ, Draper Fisher Jurvetson, where we have lots of interesting investments. We love women, and we love to fund women, and we do crazy stuff, not just apps, but we do things like SpaceX and Tesla and Planet Labs and some things that are fairly far afield. I mean, you guys do a lot of. You do a lot more than software too.
You do
I
ones
know
that are still around.
A lot of yeah. We like those ones. We like those ones that are still like going strong. So anyway, that's what I do now. I have 2 children, one who's a college student and the other one who's applying to college right now. And so you can all pity me because it's a really horrible experience to be the mom of somebody applying for college and try not to get involved. It's really difficult. So, and I'm thrilled to be here, and I'm thrilled to see all of you here.
Thanks so much, guys. So getting started, as people from DFJ and KP, you guys must have tons of startups banging down your door to get you guys to invest. How are you guys getting your deal flow, and how do you guys figure out which of these potential investments that you ultimately decide to follow up on?
My partners make fun of me because I don't actually have a voicemail set up on my cell phone because I hate talking on the phone. And so it just goes and rings and rings and rings like you would imagine a phone that hadn't been set up for voicemail does. And the reason I say that is because originally they're like, oh, but you have to because people will call and they'll leave messages. And I was like, that's the absolute worst way to ever even get in contact with me. There is not a social network that I am not on, and that is where I would guess 80% of my deal flow comes from. That's a bit of an exaggeration. I'll say 50% some form of social networks, and then the other 50% is some introduction from a friend. or a partner at another venture capital firm. By far and away, the best introductions and the companies that are the most interesting are the ones that come through a warm introduction. And so as a rule of thumb, for anybody who's looking to pitch a venture capitalist, I would always recommend finding a connection to a specific investor and getting a warm introduction.
Another way to think about it, too, is if there's a particular area that's intriguing to you, for example, sort of my current fascination with connected devices, one way to get the best people coming to you is to start talking about it and talking about it to everybody you're running into. Here's how I'm thinking about it. This is my latest theory. This is what I'm excited about. And when you start engaging people in a dialogue around a particular area, they can't help but want to introduce you to the 5 people they know that are working on that exact same thing. And so, I tend to, I kind of call it spidering, I guess, but when I get excited about a particular area, I just start talking. And that means conferences as well as just everyone I know who I think know is well connected. I reach out to those folks and I sort of plant the seed. Hey, what do you know that's going on in these areas?
I would echo the warm introduction. We just did this thing at DFJ where we looked at all the deals that had ever come through that, it says on our website, like, if you don't know us, just send it to this, random mailbox. And we went through it and we said, like, how many of those, not only did we not do those, but how many of those did nobody do? And it was the vast, we found one we wished we had done. One in like a many, many year history. So unfortunately, it just means that, in a way, maybe this isn't fair, but we sort of think of it as like an entrepreneur intelligence test, because if you can't figure out that you need to get the warm introduction because that's what everyone tells you and you send it to this mailbox, well, maybe that's a sign that you shouldn't be an entrepreneur. So I do think the warm introduction is important. I think you guys would all be amazed at how many places you can find a warm introduction just going through your networks. And, I'm a huge user of LinkedIn also to figure out like who knows who and all that kind of stuff. Lawyers, accountants, people who work in companies that are funded or competitive to others. I mean, you can find a way. And worst case, if you can't find a way, I think things like this. I mean, I will tell you, if any of you email me tomorrow and you say, hey, I was in the audience last night and here's what I'm doing and here's why something you said made me feel like DFJ is the right place, I'm going to read your email, right? So don't think it just, don't think it can't be something as loose as that. And I would say, take that opportunity to work that system as well.
The one thing I'd add is if I think about the investments that I've worked with over the past few years, I think they're probably 75% inbound, where it's an entrepreneur that I've worked with in the past or someone at another firm. But probably, 10 to 25% of it is I'm asking people what products are they using, or like asking people what are services that, like developers are using or things like that. And then because a lot of times the most interesting, sought after ventures aren't actually calling investors. Investors are calling them. We're investors at Kleiner in a company called Rent the Runway, which I don't know if, has anyone used Rent the Runway here? Yay, thank you. And if you haven't, you should try it. 2 awesome female co-founders. And I went to an event, and my sister, who lives in San Francisco, was there, and we're both like haggard working women. And she looked great. She had this great looking dress on, and I had this like bag lady dress on. And I was like, you look so good. Where'd you get that dress? And she's like, Rent the Runway, baby. And so I called my sister, yeah. And so I was like, oh, this is happening. And so I emailed the founders, Jen and Jenny, and I was like, hey, I've heard great things about you. I'm in New York all the time, would love to get together, because they had already raised a Series A from East Coast investors. And they're like, oh, we're not looking for money, nice to meet you. And so then, 3 weeks later, I emailed them. I'm like, hey, I'm in New York this week. Can we, I'd love to take you guys out for lunch. I know you're not looking for money. And they were like, oh, okay, let's have lunch. So then I bought my ticket. And I went to New York to take them out for lunch. And I basically did that for 6 months until they let us invest in the company. So that's also some of how we find our deal flows. We have to work hard for it.
So let's say that you got the warm introduction. Who stands out, and how would you stand out?
Let's see. Who stands out and how would they stand out? So there's some really foundational, fundamental things that you think are obvious, but I'm just going to state them. It's like applying to college, like you're applying to Stanford. It's not, dear Princeton, I would love to go to Princeton, blah, 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 blah. You wouldn't believe how many emails I get that are like, we would love to be a part of Andreessen Horowitz Network. And I'm like, let me just introduce you over to those guys. They're awesome. So suffice to say, there's like the basics of crossing your T's and dotting your I's. The second piece is actually if they can tie it back, not to be really self-centered, but if they can tie it back to me. So as my partner Trey was mentioning, if they can say, hey, I actually looked on the website, I saw that there were a whole bunch of dudes and more women at Kleiner, and I looked at the histories and the things that you guys are interested in and the things that you've done, and I've decided that you are going to get what I'm doing more than anybody else at that firm. And if you can say that and reference why that is so much more powerful, because I can't tell you how many emails I've actually been on where they literally they don't even bother putting it in the BCC line. They put CC every investor on Sand Hill Road. It's just like, it's a reply all nightmare. So going one step further and saying, because you were the, you led up the product organization at Square, I believe that you understand payments and the financial services industry, and I think that you will be really interested in what I'm doing because XYZ. So that also really, really helps. A couple other things, people are very, I think, potentially investors who've been doing this longer than I have are very focused on decks. So there is a cohort of investors that really, really enjoy having a deck associated with that. It's actually less meaningful to me personally, just because I hate PowerPoint and it's just like more email, but with colors. And so I'd actually rather get the gist. I'm being very actually clinical about this because I think it would be helpful if I were in your shoes. I'd rather actually get the gist of what the company it is, the big problem that you're trying to solve, and why you are uniquely positioned to solve it within the email, so that I can read it and get back to you more quickly. There's a lot of other tips and tricks, but those are just some. I know that all these women here.
What are typical things in the pitch book?
Well, what I wanted to say was I think there are a couple things that you need to do when you go in to pitch someone. And the first thing is you have to come across truly passionate and driven about what you're doing. You're in a hurry. Nothing is going to stop you. You're going to break down walls to accomplish what you want to accomplish. So there's just this sense of drive that you pick up from entrepreneurs that is infectious. The other thing that is super important is the ability not just to have cool technology, but to really tell a story. And it's a lot of people take this for granted because they think they're some hotshot coder and that they've got the best technology. But ultimately, if they're going to build a company and get people excited and and sell this thing to customers, they have to be able to paint a vision and tell a story about why this product is going to be the next most awesome thing that solves a problem. And the technology needs to be differentiated, but it all has to wrap up and support that vision in a really seamless way. And so I oftentimes look for entrepreneurs who almost seem schizophrenic in some ways. They're super driven and can tell this story, but yet I know are going to be incredibly paranoid about what can go wrong and are going to be driven to try and figure out how to mitigate all of those potential risks.
Everything they said so far, plus couple things. Number one, when you reach out to someone like me, your goal is not to tell me everything in the world about everything you're going to do and what I call deliver the email carpet bomb, right? Which is just every piece of information and I'm overwhelmed and I don't even want to open the attachment. Your goal is to get me intrigued enough to get a meeting with me or one of my partners. So at our firm, I might act like a traffic cop, right? I may get the deal and it may not be a fit for me. I don't actually do a lot of new investing, but my partners do. So I'm going to look at that and think who among my partners might be the right person. And I need to be able to forward that and it needs to be nice and succinct. Big problems. It's hard to get venture funding for the solving of small problems. So you have to be able to explain to me why the problem is a pretty big one and why. Yeah, that's a good question. I think that the challenge about how big is big, and it's an excellent question, is a lot of the best deals look really random when you first see them because they're new and different, and they turn out being really big. So like, for example, I'm pretty sure I would have turned down Airbnb because I would have said, are you kidding? This isn't a problem. Like, why would I want to sleep on someone's couch and pay them for it? It's like where it started and where it turned out. Or like Twitter. are you kidding? You know, I think I would have turned that one down too. So, you know, I think there are some things that don't look like big ideas when you first get to them, and that's where it's the leap of faith. So the other piece of this is, who are you and why are you uniquely qualified to pursue this? And so I'll give you a classic pitch that you know, that I see a lot, and I love this kind of pitch. Hi, I'm so-and-so. When I got out of school, I spent 5 years working at company, you know, X. I spent 5 years at Google. And at Google, what I realized is, even though we did a lot of cool things, the customers that I dealt with were constantly asking for whatever. And for whatever reason, Google decided not to pursue that. So I perceive that there's this big customer pain point. And Google's probably a bad example because they do a lot. But like, I see people who come out of places like Salesforce, and this is a model, right? I came out of Salesforce and they just didn't want to branch out into this, but I know that customers want this. And, you know, that may be more of an enterprise thing than a consumer thing, but that's the type of thing that helps us understand that you know your market, you know your customer, and you're passionate about solving a problem that real people have. And that's definitely a VC turn on.
Everything they said. And I would emphasize, I do think it's harder and different for women to pitch than men. Both maybe in the email, but then, you know, in your first 15, 20, 45 minutes. I think women probably have to come across as more articulate, more confident, more on top of their numbers. Especially if you are pitching a market that largely women understand and men do not. Because if the majority of the recipients of the pitch are men and they don't understand like the home industry, right? Like I remember, and Trey probably remembers, when One Kings Lane came in, a lot of people were like, what? Like, so you buy a couch, what's the big deal? You know? And like, yeah, like, why is that a problem? Like, she seems fine with it. And that was like, so it would have been a very short conversation in most firms because there's just not an understanding. And so Susan and Allie, the co-founders of One Kings Lane, they had to really be on top of their numbers. They need to be able to articulate how big the market is, because if the investor doesn't actually understand how big the market is, you just need to be drilling about it's $78 billion. Because, I mean, billions of dollars, if it is an existing market, is important. If it's $1 billion market, it's probably not big enough to get the interest of a venture investor. It might be a good business, but not for a traditional venture firm. I think investors want to hear it's at least a $10 billion market. Ideally, that's the addressable market. So just to kind of underscore some of the stuff that these guys already said.
I just wanted to follow up on your point, since I know that was one of the questions you wanted to touch on, women pitching versus men pitching. But I wanted just to say, I think it starts way before the pitch. And one thing that I think women probably need to focus more on is getting, I just want to call it the buzz engine rolling. Because I think one of the ways, and this has changed over the years, at least the years that I've been in venture, so much is driven on kind of what's in the air about a particular entrepreneur, about a particular opportunity. And there's just a natural connection of people out there. And I think because there are fewer women, they're less in that sort of buzz cycle. And so I do think it's really important, even though you're pitching a particular person at a particular firm, you need to be pitching every single person you run into to really generate and create momentum and buzz about your business more broadly. It's super important.
One more thing in about pitching. You're going to pitch 50 to 100 times before you get a term sheet. We all love to read about the weekend thing where you meet someone at the coffee shop and they write it on, and you know, somebody writes you a check for $100,000 and you haven't yet incorporated the company. And those are wonderful stories, and they occasionally happen, and people win the lottery too, but probably not you. And so, you know, number one, you're going to do it a bunch, and I would just encourage you, do it a lot, because you'll get better and better at it over time. You'll figure out how to watch people for their attention. You'll get the hot button. I do recommend always taking a second person, even if that second person doesn't talk a lot, because you need a reader. You kind of need someone who's going to figure out what you did, what you didn't do. I know some VCs will say, no, it's all about the one person who comes in, and I'm a big believer, having been an entrepreneur who raised 2 rounds and pitched one round when I was single, and pitched a lot of men, and I had some interesting stories that if we were drinking more I could share. And And the second time I went and raised, I was 5 months pregnant. And so I had some other really interesting stories of a completely different nature that time. But I do believe in bringing another person. And then the other thing, this is just a super pet peeve of mine, turn off your email before you start your PowerPoint, because it's really, unless you want to do the sneaky thing where it's like your email's going and someone else, and it's like Aileen's emailing you, it's like, my term sheet's ready, you know, or like a text pops up and it says, you know, Zuck's on the line, he says it's urgent, you know, that's fine. But for the most part, turn off all that stuff that goes on your laptop, because it's really distracting to get that stuff. And by the way, sometimes I've seen horrible, like, you know, just in the headline of the email, like, we just got 3 no's, or, you know, we just lost this big deal or something, and you're sitting there like, oh my God, what a buzzkill to see that, you know. So anyway, turn off your email.
So you're interested in the company, and you decide to do more diligence. What do you guys do?
I'm going to say it depends on the stage. So Kleiner does seed investing, so think about 100K, through Series C, growth investing, so think about 100 million. And the amount of diligence and the kind of diligence that we do really does depend upon the stage. At the lower end, at the seed stage, you're more or less making a bet on the entrepreneur. It's inevitable that the product is going to change, how the market might even change. And so you're really betting on the entrepreneur. So my preference is that we have some sort of gut check around that person. And it's not anything fancy. It's not like, okay, I want to see their grades for the past 10 years. It's not Google style, right? Like, it's not like that. It's like, is there someone else in the ecosystem that we know who can vouch for them, or we know that knows them and says, yeah, this is someone who's interesting, smart, driven, et cetera, et cetera. As you progress through the other stages, so A, B, and C, and God help you further on, it gets a lot more onerous, I'll be honest. So on Series A investments, you know, we don't just want sort of the personal references of the entrepreneur. We actually like to have personal references for the management team, because we are investing in these people for a long time. We see this money as really just the earliest, easiest thing, but we're getting involved for a very, very long time to help those people build a big company. We also want to have an understanding of the market. So we will frequently ask for references around that market, other experts, potential partners, customers, and we will get on the phone and we will talk with those folks. And we're not trying to get them to oversell on behalf of the company, or we're not even trying to get them to sort of sell out the company. You know, would you ever really partner with this? We're just trying to understand a market where we have obviously not spent anywhere near as much time as the people that are involved. And then sort of the third piece around the references, you know, outside of sort of customers and particular partners, and around the entrepreneur themselves, is just other people in the ecosystem that we know have touched this market in some way, shape, or form. And it doesn't even have to be something or someone that the entrepreneur or that company knows, but hey, if we happen to know, you know, I came from Google, so Google's doing a lot of different things, and someone's coming in and they're pitching me on a video conferencing service. Well, I'm sort of curious what Google's thoughts are on video conferencing, and where are they going with Google Hangouts, and are they thinking about that as a video conferencing replacement? So there's all these ancillary market conditions that we like to check as well. We try and do it as quickly as possible, and it's always sort of I think one of the tough challenges for entrepreneurs is to wait out that period of time, but you're dealing with busy people and busy schedules, but we do try and do it and be really succinct, and it's about getting educated. It's not about fact checking. It's not about trying to find skeletons in the closet. It's really about educating ourselves more thoughtfully. I will say then, when you're getting up into the later stages, and I don't want to take over this whole panel, but it is a lot more looking at the numbers as well. So at that point, we expect you to have a business, and for that business to be growing at a very substantive rate. And so that kind of diligence, less about talking to people, more about really opening up the books. We'll open up a clean room so that we can get all of the data and really take a fine look at how the business is growing.
One of the things you just brought up that I want to latch onto here is timing, because it's one of the biggest complaints entrepreneurs have, which is, I pitched the VC and like they didn't even get back to me. And none of our firms would do that, of course, but it is a really common thing that the VC timeframe works more slowly than your timeframe as the entrepreneur. And there's good and bad reasons for that, but the problem is, unless there's urgency, unless the deal is competitive, you may be urgent, you may need the money, but the VC's not urgent, right? They're not, until you tell them that someone else is competing, for a lot of VCs, they're going to take their sweet time to do this. And part of the good reason they do that is because actually part of the getting to know you in the Series A process is to have you come in, you'll pitch, they might ask you some questions, you're going to say, let me get back to you. Then they want to see if you get back to them. And then you might say, we're going to close 3 beta customers in the next 60 days. They might want to wait that 60 days. We're going to do our first $100,000 quarter as a SaaS company. They'd like to see you actually do it. So a little bit of the problem here is, I know when I was an entrepreneur, I'd pitch and I'd say, here's my business, either like it and write me a check or not, right? But I've just told you everything. What could you possibly also need to know? But unfortunately, they do need to know a lot of stuff that they only are going to get in the passage of time, and it's super frustrating, but it is a little bit of what you have to expect when you're going through this process.
I just wanted to add, we're talking about the diligence that investors do on the entrepreneurs, but just to remind you that it's equally as important for the entrepreneur to diligence the investors, and in particular the individual and the firm that you're choosing to work with. It's harder to get rid of an investor than pretty much anything else in your life or your company. It really is impossible. It's a relationship that's going to be around for a very, very long time. So it's important for you to find those relationships, both positive and negative, and understand how that person reacts, in difficult situations.
So one way to think about that, and this came out of my experience at Square, and Jack was like, he learned from Twitter, and so he was very focused on this at Square, was that consider investors and employees that you can't fire. So you can bring anybody else on board to the company, and for whatever reason, you can let them go. But an investor is an employee, someone you're bringing into the company that you essentially can't get rid of.
That's great. That's so true.
It's easier to get divorced, it turns out.
Do you guys see competition from angel syndicates, for example, who can make investment decisions faster and therefore not take a lot of valuable entrepreneur time, for example?
Yeah, I don't actually. I think that syndicates are great, and I think AngelList is great. I think there's a lot of inefficiency and opportunity for investors to be better and deliver better service to entrepreneurs. And so I think like a lot of this disruption that's going on, I think it's awesome and fascinating, and it's like a real-time evolution experiment that we're watching in front of us. But I don't really know how it's going to play out. But I would say, so I've been kind of a full-time seed person for the past year, and I would say it's a very competitive market where you really have to add value to be an anchor investor in a seed round. And I think the smarter seed entrepreneurs are trying to figure out, like, what is the ideal village that I'm going to put together that is going to help de-risk the company and get me in a place where I can raise my Series A with no problems and have my pick of individual investors and firms, like partners from firms at the valuation that I want. What's the composition of the group that's going to help me? And it usually turns out that it's 1 to 3 anchor seed firms, it seems like, whose job is to get you to that place. And they're kind of Switzerland, where I'm happy if Kleiner is the A, or Sequoia or Benchmark or DFJ is, but like that's my job, is to get you to that place. And then so maybe that's going to be 75-80% of the round, and then 20% of the round is going to be individuals who are really going to help. And if it's just a check, maybe because they're famous or something, I'll take their check. But even being famous brings something of value to the round. And so I think if the check size from a syndicate is $500K, but it's $500K of not a lot of help, for a competitive investment, I don't see that actually is going to win.
So why do you think that some people are actually going to crowdfunding, for example? So going to Kickstarter instead, and just kind of foregoing the entire network?
I do put Kickstarter in a little bit of a different bucket, although I equally love both. I actually love Kickstarter, and I think most investors do, and here's why. because you're proving that there's market appetite for whatever you're building. You're basically doing some of our work for us when you go to Kickstarter and you're able to say, oh, look, I was able to generate $35,000 and 500 people within 24 hours wanted this widget that I'm building. That's like, oh, great. Like, you've already got some market interest. I think that's awesome. We can build upon that. That's like part of our diligence process, is understanding what the customer sort of interest level is. So that's awesome. I think Kickstarter is really amazing. I think sort of aspirations of Kickstarter or AngelList sort of completely overtaking the entire venture cycle, I don't think that that's going to happen anytime soon. I think, again, for really big, meaningful companies, they ultimately, with all due respect, need really big, meaningful checks. And they need really big, meaningful people to help them grow into the company that they can be. And it's hard to do that sort of dispersed all along the way. So I'm a big fan of both.
I'm a big fan of all of this too, and I like to see it. And I think some companies are also just not things that are venture fundable. And that doesn't mean they aren't great companies or great ideas, but some of the things just don't fit the model of how venture works. And so, and for anyone who wants to raise real venture and believes your company fits, there's just this great book to read by two former partners of mine, Brad Feld and Jason Mendelsohn, called Venture Deals: How to Be Smarter Than Your Lawyer and Your Venture Capitalist, or something like that. And
By the way,
highly
I read
recommend.
that. I signed at Kleiner, and then I went on a trip to Mexico, and I read that book.
Yeah, it's an awesome book, because you have to, it just gives you all the basics. It tells you like how, it isn't just terms, it's like how firms work. Why do they do what they do? I mean, it's that stuff you need to understand, because you got to understand what it is they're looking for. So I love a lot of this stuff. I just put $300 into a movie on Indiegogo this morning that I liked, and I know the producer, and I'm like, yay. I mean, that's a different kind of investing, and sometimes that works. I think that the reason why I worry about some of that is it can be very trendy, and if the going gets rough, and I've never been involved in a company that didn't have a rough patch. Maybe I picked bad ones or something, but I've never been involved in a company that was just up and to the right, as Bill Campbell likes to say, all the time. And when you go through that rough patch and you miss a product shipment or a quarter and you run out of money, all of those people who funded you in that manner don't generally come and put more money in you when you're in trouble. And so the thing I like about good professional investors is they get the vision, they get what you're trying to do, and when something goes bad, they have to make a call that says, I either believe in this company or I don't believe in the company. And if they don't believe in it, that can be a problem for you, because that, we call that signaling risk, right? When you have a brand name that has plenty of money and they're choosing not to write you another check, that can be a problem for you as an entrepreneur. But the flip side is, I've also been in that situation where they believe and they're willing to write you those checks even when other people don't believe. And I can tell you, as a venture capitalist, some of our best returns have been when companies have been in a rough patch and the other investors say, I'm out, I don't have any more money, I don't have faith in this, I only invested because it sounded good at cocktail parties at the time. And then we've stayed in and we've ended up making huge amounts on those deals. So that, for me, is the reason why I think professional investors probably will continue to have a role to play.
I also just wanted to highlight a potential danger too of some of these big syndicates where maybe there's a company that's got a lot of buzz and they have a choice of raising some money from maybe a traditional investor at a lower valuation or from a bunch of investors at a much higher valuation. And the problem is, when you have a lot of people investing a little bit of money, they become pretty valuation insensitive. And what has happened, and I think what a lot of people fear, is sort of this seed overhang, which is a company raises a lot of money at too high a valuation and then becomes stuck. They're sitting on this very high post-money valuation. The company has not had the progress that it needs to live up to that valuation, and then they're screwed. It's really hard to go raise more money, and there's then you end up having to deal with a reset and a loss of momentum and all sorts of things. So just keep that in mind as you guys are thinking through your options and making sure that just because you can raise at a high valuation doesn't necessarily mean that you should.
So Aileen, you started talking earlier about your Cowboy VC. Could you talk a little bit more about it? And as someone who's had experience also at KP, how that's been a different experience.
Aileen's going to pitch you all now. Works both ways.
I mean, it's been really fantastic. I mean, basically, Cowboy is a startup, so we're a tiny team. We don't have an office. We're kind of virtual, but it's been fantastic to kind of have the chance to start with this clean slate again and try and shed maybe some bad habits that I may have acquired over the years and learn a bunch of stuff. I'm just amazed at how much people can get done now with $1 million. And so that's why I've moved earlier, is because I really like working with early stage companies. And also I feel like hopefully we can be helpful because I have a lot of perspective on what happens after seed and how do you get to a good Series A and how do Series A investors think and help train people in a way to be ready for their Series A. I spent 2 hours yesterday morning with one of our entrepreneurs who he's never been in an organization where he had exposure to being on a board or having a board. So what does a board deck look like? And like, when do I have to have board meetings and what do I have to say? And so, cause he's seed stage and so he doesn't really have a board. And so we kind of built his draft deck and his metrics dashboard and talked about setting up like a fake board. So like every 6 weeks he has a call with his investors and he pretends that it's like a board meeting so that when we have to go raise money, he's ready for it. And it's really, really fun. But it is definitely seed stage entrepreneurs, I think by definition versus Series A are more raw. Like they're not as prepared. They're sometimes not as professional. They just, because it's a lot of times it's their first time starting or running a company. And so that's been a big change because obviously kind of by definition, when we see people at Series A or Series B, they've kind of been through the first stage of the rodeo. So that's what I mean, I think all of you guys understand because you're probably in startups or you're thinking about starting one that, it's a really risky time. You have to have a lot of patience and passion because there's a lot of startups. Pretty much for every idea, there's 5 or 6 other people competing with that idea. And to build a really big company takes a long time. So it's and you get paid a lot less than you would be if you were at a big company. So I feel really fortunate that we all get to work with people when they are kind of like so naked in their careers, and kind of offering hopefully support and trust is kind of a privilege.
So let's say you're an entrepreneur and you're making a decision of going to seed or kind of bootstrapping and then going for Series A. Do you have any guidelines kind of for thinking about this, or?
I thought Megan was going to answer it. So.
Yeah, so thinking between going to Series A and bootstrapping until then,
right,
or going straight to seed
right,
at an early stage.
Oh, it's really, that's a tough one. I mean, I think, obviously if you can bootstrap to generate traction, I think you should, because the more traction you can demonstrate when you go for your first funding, the better investors, the better valuation, the less dilution you're going to see. So I would make as much progress as you can with as little as you have. But when you find that it's just impeding your ability to actually be successful, then it's probably time to raise some money. It's really hard to go straight to A. Like in today's world, I feel like almost everybody starts with some amount of capital, whether it's 500K or $1 million or $2 million, proves out product market fit. I mean, generally I feel like in seed, you're proving out product market fit. In a lot of cases, A is when you're basically hiring investors to help you scale. It's very rare that you're going into A where you haven't proven anything.
So Trey, as someone who used to be an entrepreneur, and I know Heidi and many of you have already as well, I would love to hear about your work with Good and how now as a VC, your experience as an entrepreneur has kind of shaped you, hopefully, to make better decisions.
Oh boy, so that is stretching back a ways, I have to say. That was back in 2000 when I was an entrepreneur. And I guess a couple of thoughts on that. One is that being an entrepreneur is incredibly crazy and emotional. It is an emotional roller coaster, and you literally have to put 120% of yourself into it. And you have to be prepared for that. And so some of the advice that I give to folks who are coming out of school, if you think you want to be an entrepreneur, just run and go do that as soon as you possibly can, because first of all, you have to test whether it's right for you, because it isn't right for everybody. And there's no better time in your career to take that kind of massive amount of risk than, right out of school or, as young as possible. the other thing that I think I'm emotionally scarred from is that it sort of feels like every day is a life or death situation when you're in a startup, and you don't realize how true that is. Before I was in a startup, I was at IDEO, and so I was, a consultant, and I realized how sheltered I was from reality around just making the real trade-offs between time, cost, and life or death, and so I think just it's that paranoid state of mind, again, and learning how to manage that, not letting that eat you, but realizing that every single day needs to be about risk management. Okay, how can I manage not to die and figure out how to, thread the needle through this handful of things that I need to solve, and doing that is really the teams that seem to do that best are the ones that are just incredibly good team builders. They're passionate about it and they can get great people on board. And so, when it was just a few of us at the beginning of Good, and Aileen was at the beginning of Good too, because, we were all there, we incubated it in the Kleiner offices. And it really is about getting the smartest people around a table and then just kind of all holding hands and jumping in. So, I'd say the other lesson is it's team, and just hire the best people you can possibly hire as soon as humanly possible.
Okay, great.
There was the CEO of Teammaker. It was not like it was just awesome, easy.
Yeah, it was easy. I was just gonna say, 14 years I did that job, and I'll tell you, there were super awesome days and there were super sucky days. There were no easy days. None. Zero. Because every day there's a million things you could or should do, and it's Mortal Kombat every day, and you're always worried about going out of business, and you're always worried. And we were profitable even before we ever raised venture. So we bootstrapped up to $3 million in revenue before we ever raised venture. So even then, and we had our bad quarters, and we had our missed products, and we had our almost out of business times, and then we had our hit products, and we did all that kind of stuff, but it was never easy. And so the one thing I would say that I've learned as a venture capitalist from all those years is never let a venture capitalist tell you that they work harder than you do or that their job is harder than you do, because that's just complete bullshit. And it's one of the things that just really bugs me as a recovering entrepreneur when I'm in these board meetings with other venture capitalists, and there's a lot of bad behavior among venture capitalists, and like they get angry when the company's not doing well, or they work against the CEO. And when I first became a VC, this other VC gave me some great advice. He goes, every day, think about your companies that you've backed and decide either you support that CEO or you don't support that CEO. If you support them, go in and try to do everything you can to make them successful. If you don't support them, either fire them or get off the board. And I love that advice, because what I see happen a lot of times is the VCs decide they're unhappy or they're mad because this isn't working out and one of their partners, has a hotter deal or whatever. And they take it out on the entrepreneur and they just make their life. You guys probably never seen this behavior, right?
Oh, no.
And it just bugs the hell out of me, and you can't fire these people, and so it just really bothers me. So one of the things I do, honestly, one of the roles I play as a VC is I'm sort of the sympathizer with the CEO. I just met with a CEO today who's got it's a circus, that board. I shouldn't say that, but it really is. And he's a first-time CEO. He's a very senior executive, but he's a first-time CEO. And really what I had to sit down with him and do today is I let him rant for a half an hour about the clowns. And I really did say, it's a circus and these are a bunch of clowns. And I said, but here's the problem. Your job is to manage clowns in a circus. I mean, so part of being a CEO is you got a squirrely board and they all want individual attention and they all have divergent motivations. And this is why you read Brad and Jason's book, because you learn about multiple rounds at different valuations with different preference structures and different, and they're different. And you've got to understand all that. But part of the job when you raise venture is actually to take care of these high maintenance individuals that you get stuck with. And I mean, I'm being bad because there are some good venture capitalists, but there are also, unfortunately, a lot of bad ones. And I don't know, I just have great sympathy and empathy for CEOs. But I will say the flip side of this is I worked my ass off for all those years. And so I also do not have any sympathy for an entrepreneur who tells me they're working too hard. And I actually got in trouble with my prior firm because I backed a female entrepreneur, and she decided to take 2 weeks off to go on a honeymoon. And I actually said, you know what, you just raised money, you're having a really tough quarter, you're kind of most of the companies at this size, the CEO is the chief salesperson. And I said, do you really think it's a good idea to take a 2-week honeymoon right now before the end of the quarter? And she got kind of mad at me. And my all male partners said, you're kind of harsh, right? This woman's 40 and it's her first marriage and she's just whatever. And I said, you know what? I am sorry. I was the CEO of a company and I was raising I got married and I took Friday afternoon off and I was back at work on Monday. So I don't have a lot of sympathy. When you decide to be an entrepreneur, you do have to actually work your ass off. And so I'm kind of a harsh boss about that kind of stuff, or a harsh, board member about that stuff.
I have a similar story. I was not the CEO, but at Square in my job and with my with my board, which you can read about the Square board at some other time. I was engaged and I went and got married, and I said I'm taking off Friday afternoon, and I left. I had not taken off any time ever, like Christmas, nothing. Left Friday afternoon, went home, did my rehearsal dinner, got married, and was back in the office at 10 a.m. on Sunday morning. And people were like, is that a wedding ring that you're wearing? Anyway, sorry, that's a total aside, but suffice to say, you don't even just have to be the CEO. There's we have these expectations around the management as well.
So speaking of risks, what is the biggest risk that each of you have taken in your careers?
Mine's probably going to venture from operating. There's all these old wives' tales like, oh, you can go into venture for 2 years, but if you go any longer, you can never go back into an operating role. Or like, oh, if you go into venture, like you die in venture, or, like all these things. And I still to this day consider myself more of a product person than an investor, and I really like working on products and working with product teams. So for me, sort of crossing the chasm into the investing side was probably the biggest risk.
I remember, so I think the thing that was was the biggest change of direction and most shocking to those who knew me was I was working at IDEO as an engineer. I was actually in the middle of designing the Palm 5. So stuck in front of my CAD screen, and I'm designing parts and speccing displays and batteries. And I was looking at this team who I was working with, Jeff Hawkins and Donna Dubinsky, who I loved. And I was noticing that, God, they went from this awesome, tiny little scrappy startup on El Camino to this amazing company called Palm. And I'm still sitting here in this consulting firm in front of my CAD screen working. I think I'm on the wrong end of this equation. And so kind of out of the blue, I decided that I was going to figure out how to redefine myself and throw myself into the entrepreneurial world. And at the time, the best way for me to do that was to go to business school. Probably not the case these days, but so that's what I did. All of a sudden, literally like the next day, I applied to Stanford, got in, went to business school, and everyone else who was around me was like, "You're crazy. What are you doing?" And I said, "I'm going to go be an entrepreneur." And that was probably my biggest risk, which ended up being incredibly wonderful experience for me. But it was sort of, I don't know, it just inspired me, and I took action on it.
Risk. All right. Risk is really important, and along with risk comes failure. And so when you ask the question, what were your biggest risks? The interesting thing is the first thing that came to my mind is what were the things I did that I really screwed up? Because when you risk something and it's successful, you kind of in your mind rewrite the history and say, oh yeah, I was destined to succeed. But so starting a company with my brother when I was fresh out of business school, and I went to business school for kind of the same reason. I went and got my first job, and I realized everybody getting ahead either had an engineering degree or an MBA, and I didn't have either. And I figured the MBA was easier, so I went back and also went to business school. Starting a company with my brother with no experience, getting turned down by a bunch of people and keeping going until we built it to $3 million and profitable. Countless decisions every day where you I remember having this huge scream fight with someone at 3 a.m. when there were like 7 of us, and we had one of those meetings, and we were really upset with each other, and everybody had been working like crazy, and we're like, can I say fuck you in this? You have one of those fuck you meetings where you're just like screaming at each other, you slam the door, and I go down the parking lot, and I'm like, okay, it's 3 a.m. I just told the chief engineer to go, and I need to ship this product, and I can't quit because I'm the CEO, and I guess I have to go back in there now, and then, like, oh, I wish I hadn't done that. But, countless ones of those. But what I would say is, number one, it's really important to take those risky decisions. It is important to know what you're willing to risk. That's where I think, starting something right out of school when you're used to working long hours and not making any money for it anyway is kind of a good thing to do. But, I sold my company. I went to work for Apple. That was a big risk. I left Apple after a year. I decided that was not for me. I felt like that was sort of a little bit of career suicide because it was really high profile to go there. It was really high profile to leave. It was a very bad time for Apple. I've had successes and failures, and sometimes you just have to say, I'm going to go do this, and I might fail, and when I fail, the great lesson is you pick yourself up and you go try to do something else. And I think it is one of the things that is awesome about the kind of work we all do in this room is I think that you can learn through massively big failures and come back around for another at bat. And in fact, I do think we really appreciate when someone has failed and can articulate why they failed. If you come in and you worked for a startup that you worked at any one of the, big flame outs, right? And we say, what did you learn from that experience? If you tell me what you learned through that failure and it's a good lesson, that makes me really excited about working with you because that's really hard-won experience. So, but that said, I want to close on this because I teach entrepreneurship to students at Stanford, and everyone talks about, oh, we celebrate failure, but the reality is we don't celebrate failure. Failure sucks, and it's hard, and it hurts, and people don't like to talk to you after it happens and all that. So recognize that all that stuff about, woohoo, we failed, is not actually, that's not the truth. And so it's going to hurt. If you know it's going to hurt, it's a lot easier to get through it. If you think everyone's going to be super nice to you after you fail, that's not actually true. So just be ready.
I can't top like that. I be honest, I feel like I was like born to a good family. I went to good schools. Like my life has been relatively easy compared to like how it could have been. So I don't really feel like it's been, I have definitely done things in my career where there have been interventions. People have tried to talk me out of things. But I think, it's funny, like when I graduated from business school, I went to go work at the Gap, right? And so my family had this intervention because, well-educated, smart Asian kids don't go work at the Gap. But I got really, I just felt like I felt some passion, like it was something that I would learn from. And if it didn't work out, hopefully I could still go do something else. And I wound up having a great experience there working for 3 years. And I wound up being the chief of staff to the CEO and then getting in on the internet e-commerce part in 99 when we were just building it. And that's how I wound up. And then at Kleiner, I didn't know anything about startups or venture capital or Silicon Valley. I was like a girl who worked at the Gap who rode her bicycle to work. Like I was not, and I was the first woman at Kleiner Perkins. And I think I got lucky, but I guess maybe I also took a risk kind of walking into what could have been quite a lion's den. And I think I was fortunate because I think at a lot of other firms, to be honest, I would have been chewed up and spit out. And I got fortunate that, I think there's a reason why there's 3 women from Kleiner here. It's like, we are actually 90% of the women in venture capital. And then actually, 8, 9 years into Kleiner, I actually took time off to go be the founding CEO of one of our portfolio companies. That was a struggling company. Yeah. And so I was the founding CEO of a company called Danu. And fortunately, I had done venture for a while, and I could kind of see that like you should raise as much money as you can when you can raise it. So we raised raised $20 million Series B, and then 2008 hit, and new media and like basically all money for all digital media just evaporated. And so we had to lay off half the company to make sure we could survive. And those were really tough times. And I was like sales girl. I was living in New York, like sleeping on couches, waiting for media planners to take like 25-year-old media planners, begging them for $50,000 ad buys. It was really tough. But it was a great experience, I feel like. And then I guess starting Cowboys, it's been like a little bit of a risk, but always leaving a safe place like Kleiner that's socially acceptable, and doing something where you don't really know if people are gonna like be nice to you, or if they're gonna answer your calls, or if they were being nice to you before because you were at Kleiner, or because you're actually you. And that was the risk I wanted to take, because I wanted to show myself that it can be me, it doesn't have to be the brand.
Those were actually a lot of great risks, so thanks for sharing. And I'm not sure if you guys know this, but Heidi actually has an HBS business school study written all about her. And apparently she's quite the networking pro. So Heidi, could you give our audience some tips on networking?
Long topic. Well, Reid Hoffman wrote a really good book on the topic about 1.5 years ago, and you should definitely all read that book, because it's, it's like, it's a lot of great common sense, but it turns out common sense isn't that common. So I really believe in that. I mean, I think look, the thing that I tell people all the time, and you are already doing it because you're all here. I think the biggest thing people don't do is they don't take that little bit of energy and that little bit of personal risk to go out and meet other people. And to me, it's because it's intimidating. People say to me, "Oh, Heidi, you're an extrovert. It's easy for you." I'm like, no, it's not. There's probably never a night where I'm at home and I'm, patting the dog and I'm whatever I'm doing, making some dinner, and I think, yeah, I'd really rather just go put on a suit and drive to San Francisco and hang out with a bunch of people I don't know, right? I mean, we all have that. I don't know anyone who actually gravitates to that naturally, but I think once you get here, you kind of get into it. It's about the same as going to the gym. Like, I don't wake up and think, I really want to go do the gym. But once you get to the gym, it actually feels pretty good. But I'm not that person who ever wants to. People say, well, I have to be motivated to go do something. And there are a lot of books on psychology that say, actually, that's not true. You have to go do something, and then that will turn you into being motivated. And so I really believe that, and it works for exercise, and it works for things like this. So one piece of advice I would give you is that when you come to something like this, don't be intimidated about, I got to meet everyone, I got to meet the most important person in the room, I got to make it count. Because first of all, it's just really hard to do. And second of all, you don't know who the most important person is in the room is, because you don't know who the most important person to you is. And I would argue that a lot of the people that I meet and have collected over the years, I sort of go out and my goal is to meet interesting people that I resonate with, and because someday those people might or might not be important to me, but they enrich my life no matter whether they ever become important to me or not. And many of the people who end up being super important to me, sometimes I don't even remember how I met. Actually, I had this conversation with Shelley Archambault a couple nights ago. We met someone, we were at dinner, and someone said, "How did you two meet?" And we were looking at each other going, I don't even remember how we met. And she's this super, now great friend, great CEO of a company, Kleiner Company. And I'm pretty sure I met her at the Kleiner Christmas party, actually, after I thought about it like a million years ago. But anyway, the goal is meet one person, meet one interesting person every time you go out. First of all, I think it just makes it makes it not so scary to go to something. And it's not about meeting one important person, it's meet one interesting person. So just keep talking to people till you find someone that you really like and think is interesting. And I would argue that over the years, you will build up an interesting collection of people. And that would be the other thing I'll say as the senior citizen on this panel, is I am amazed at how many of the people in my life, they come back around and they come back around and I come back around, and there's so many people that I work with today that I have known for a long time. That doesn't mean I don't also want to meet new people. One of the reasons I teach at Stanford, it is, believe me, not for the high wages they pay adjunct faculty. It's because I get to meet, Stanford does a pretty good job picking a room full of people, and I get to meet them, and they kind of self-select me, and every year out of the 50 in that classroom, 5 of them are going to be the kind of interesting people I like to meet. And I like to meet interesting 20-year-old people because they go on and do really interesting things and they know stuff about the world that I don't know. And it really is a two-way street, even though I'm the older person. So I think it's that, number one, you'll be amazed at how many people you will run into over and over and over again. And that's why it's important to maintain those relationships and always be true to yourself and be true to your ethics, because if you screw that up, those people that you screw that up with will, they'll come back around. And the second thing is, don't be so focused on looking up in the hierarchy or in the whatever, because some of my most powerful relationships have been what one would consider traditionally down the ladder, not up the ladder. And it's super important to take a flyer on those meetings where you just get a sense. I have this, my Cheryl Sandberg, how I met Cheryl, right? She was dating one of our portfolio CEOs. It was back when she was with the government, and I liked this portfolio CEO, and he said, would you meet with my girlfriend? She's thinking of moving out to California and maybe going to take a job in the tech industry. And I took a flyer and I met with Cheryl, and I really liked Cheryl. I thought she was really cool. And she said, I have these 2 job offers. One of them, I don't remember what the other one was. Let's just say that was the one I told her to run screaming for. She said, I have this and I have Google. I'm like, run to Google, go do that, And so when I met with Cheryl, I didn't know Cheryl was going to become Cheryl, right? And there's lots of people I meet with who don't become Cheryl, but once in a while, people like that do become Cheryl, right? So, and then people say, well, how do you know Cheryl? Well, I met her back when she was only Cheryl in name, not Cheryl, the global Cheryl. So, so anyway, my point is just go out there, do things like this, because you never know how it's going to turn out. And I think for me, it's turned out great.
Fantastic. So my last question. You're looking back and giving your younger self, it could be at any point, 20s, 30s, whenever, a piece of advice. What would that be?
Okay. You want to start?
Yeah. I would say trust your gut and don't be afraid to say what you think, even in a large group of people who you think are smarter than you.
Mine, which I followed to some extent and then didn't, and that's when I would get in trouble, was having a default for saying yes. Like, people would ask me to do things all the time that I didn't think I had the skills for, or the background for, or that I was qualified for, or that I wasn't maybe even interested in. And the way that I got to Square, and the way that I got to Kleiner, and the way that I got to do some of the cooler things I think I've done was just because I was like, hell, yes, why not? I was originally hired at Square to be their director of risk. I had never overseen risk at a payments company in my entire life. And if you know payments, you know that risk is the product. And I was like, oh, well, I'll figure it out. Who knows what anti-money laundering laws are, but I can read them. And then, 2 weeks later, they smartened up and they put me into the head of product role. But I only landed there because I was like, okay, I can figure this out. Just say yes, and having an inclination for yes.
I'm still trying to figure out the right way to communicate this one, but it's something that I learned. I feel like I learned too late in my career, which was you are the only person who's looking out for you. And I don't know what it is, but I guess I put too much loyalty or kind of familial sort of relationships around the people that I work with. And in the end, everyone, and it sounds sort of cold-hearted, but and so, which is why I'm still trying to figure out how to internalize this better, but there's no one who's looking out for you but yourself. And so, the company that you're working for is not looking out for your best interests. The people that you think care about you aren't necessarily looking out for you. Everyone is looking out for them. And so what that really means is that, if this whole notion of sort of putting your head down and working hard and thinking that you will be acknowledged at some point in the future for all your great work just doesn't exist. So you need to be always making sure that what you're doing is being seen by the right people. You always need to be advocating and building a platform for yourself. I guess maybe that's the right way to say it. It just took me a while to get there.
It's super important. I mean, that is super important, right? There's this, it's two sides to the coin though. There's this saying that, I think it was Shirley MacLaine who said this, the 20-40-60 rule. How many of you know this? Okay, I'll tell you this. Okay, at 20, you're constantly worrying about what other people think about you. And at 40, you wake up one day and you say, I don't give a damn what other people think about me. And at 60, you come to realize nobody's thinking about you. and I think about that all the time. And I'm closer to 60 than any of those other numbers. So, and to me, it's both sides of this. On the one hand, nobody's thinking about you. So it's absolutely true. You have to go fight for yourself all the time. You have to put yourself out there. You have to ask for the compensation that you didn't get, or that, when there's a gray zone about whether you should have been paid for something or not. You have to go after all that stuff. But the flip side also is, there's a good side to the nobody thinks about you. And the good side of that is, like, sometimes I'm on this board in London, I go to these board meetings and I pack my stuff and I get there and, you have that morning, you pull your suit out and it's all wrinkled, or God forbid you packed the black shoe and the blue shoe of the, at least one left and one right, because it could be worse, but you have two wrong shoes, or there's a run in your stocking and you're like, oh God, nobody's gonna take me seriously, and then I thought to myself, Heidi, have you ever gone in a meeting with someone and said, I'm going to completely discount that person because they have a wrinkled suit, right? Or this was for years when I had, when my kids were babies, I used to call it the mommy badge of courage, when there'd be a little spittle right here every morning on me, because you'd pick up the baby and you'd do something and then you go to work and you have the mommy badge of courage right there. I never look down on someone because they have something like that. And even when you screw up and everybody talks about you and you're the dumb fuck that week, someone else is the dumb fuck next week. And I just feel like people take themselves too seriously. And so it sounds like it's on the one hand, yes, you have to take yourself seriously and you have to go fight for yourself. But on the other, when you have a bad day or you fuck up or some dumb thing happens, just move on. Don't be too hard. You learn what you can from it and hold your head up high and just go out the next day and keep going. Because it's the people who just let that defeat them that stay defeated. And bad stuff happens to all of us. I mean, I'm pretty sure all of us have had some bad. I know I've had some bad stuff happen to me. So it's not the bad stuff that happens to you. It's how you react to it that I think really defines who you end up getting to be.
That's perfect. Thanks so much, guys, for coming in and speaking with us. At this point, if any of you guys have to leave for other engagements, you should do so. But otherwise, we can open up for a Q&A. Thanks so much, Megan.
Hi, my name is Keisha Richardson. I'm an engineer and entrepreneur. And my question is about seed. What are the three, for those who invest in seed, what are the three qualities or characteristics that an entrepreneur should look for in an anchor seed company? And if you do not invest in seed, what are the three characteristics that you would look for to run away from the from the investors that entrepreneur chose?
That's a really good question. I would think about what are the main areas of risk that you're going to be trying to overcome in your seed round. And number one is, can the investors who you're getting involved, the anchors who are going to be most hands-on with you, help you figure out how to get through those risks? If it's team building or market adoption or technical problems or something like that, like, do they have expertise? And kind of maybe it's number two, or maybe it's related. It's like, do they kind of get your market, and do they believe in your vision, and do they actually have enough relevance where they're going to be additive to you? Three, I think, is probably chemistry and trust. Are there values? Like, this is, one of the things, like when someone was asking before, where Rose probably was, about like, what happens if they do get to you? How do you evaluate them? Like, a lot of it is like going out for dinner with the entrepreneur. And on both sides, like, do we have a good chemistry? Is there honesty? Are you going to be able to tell me what's really on your mind? And are you going to listen to what I have to say? It's all that back and forth. If the chemistry isn't there, it's probably not a great fit.
I think it's the same. It's what you just said. It's the other side, right? Is you do those things, and you have to trust your gut. And I think one of the hardest things being an entrepreneur, and especially when you're seed stage, is unfortunately there's not always competition for your deal, right? You will end up with one person. And I think it's one of the cool things about the platforms of today is momentum gets created in a public way, and then all of a sudden you will get more people on your team, or you might get competition for the deal. But a lot of the entrepreneurs that I'll meet with, I've had countless meetings with entrepreneurs who say, I took 50K or 100K from this person, and it turns out that they're just a moron, and they're awful, and they're whatever, and I don't know why they invested in me, and now I can't get rid of them, right? And I feel sad for those people, but I think the reality is a lot of times, when you're an entrepreneur and you really need that first 50K to get going, and someone's standing there and, they're your uncle's dentist or whatever, and he just heard that people make a lot of money investing in Soma, and they don't even know what Soma is, but what the hell? Then you get stuck with that person, and it takes a lot of discipline to not take the money from a bad person.
Feel free to say your name as well. Okay. Hi, I'm Lauren Furness. I'm actually a tech journalist, but I'm in the process of figuring out if I want to become an entrepreneur or if I want to sort of reinvent myself. Several of you talked about your business school experience. I wanted to hear what was the most important or most interesting thing you learned during your time getting your MBA, and also today, do you think an MBA is crucial for business leaders?
Ooh, business school professor, what are you going to say?
I teach in the engineering school.
Okay, good.
So I actually think, for me, when I went to business school, it was all about the network. I had spent so many years of my life steeped in engineering and other engineers, and I couldn't figure out how to break outside that network. And I think historically, business school has been a fantastic network. But I would argue that, at least today, the barriers to starting a company and being able to find new networks and network into new areas is easier than it has ever been. So you need to do the math in your head. Is pulling myself out of the workforce and experience for 2 years, an incredibly productive 2 years that I could be in the workforce, is that going to be beneficial? And I think the thing that's somewhat shocking to people is when they come out of business school, they oftentimes accept a job that is of lower status than they would have had they stayed in their previous job. So it's sort of like they were on this slope and now they're down here, but the hope is that the slope is higher. I think that worked out for me, but I think it really depends on whether you have sort of those right opportunities in front of you at that time.
I think that's a good answer. I think business school is a good way to kind of repot the plant. So if you want to try a new function or go into a different industry, it can be a good way because you have the chance to have an internship and stuff like that, so you can kind of get some experience in a new field that might be hard to do otherwise. But if you're already in tech and you're planning on staying in tech, I have my husband's stepsister is a 26-year-old Googler, and she was telling me how it's not cool to go to business school anymore for for all her friends. But I see why. It's she's at Google, she wants to stay in tech. I don't know what she's going to get out of it.
For me, I went to business school a long time ago. In fact, this month is my 30th reunion. And I'm really excited about going because it was a largely male-dominated class, and I'm recently single. So, yay, reunion. That's what all my fellow aged single friends say. Oh, business school reunion, awesome. Great target-rich environment. Okay. Seriously, there's 3 things about business school, right? There's what you actually learn in class, and I would argue pretty much there's not a lot of that you wouldn't, if you just spent 2 years in an interesting company, learn as much or more. Then there's the people you meet, and I would argue depending on the school you go to and the era and all of that, you can meet some really interesting people with really diverse backgrounds and all of that might not be what you'd meet depending on what company you go to. And then number 3, there is pedigree value. And interestingly, pedigree value in my career has turned out to actually count. And it is a weird Like, I remember when I was running my company early on, we had this customer in Japan. I went over to meet with them, and I don't speak Japanese, and they were introducing me to someone, and they'd say, Heidi Roizen-san, blah, 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 understand for the MBA. And so I knew it was important to my Japanese customer that I had a Stanford MBA. And so then it turned out, when I ultimately decided I want to get into corporate governance, the fact that I had an MBA was sort of like, like your non-idiot driver license, right? It was sort of like, oh, she got an MBA from Stanford, she can't be that dumb. And then when I got into venture capital, interestingly, a lot of venture capitalists have an MBA. Okay, is it because venture capitalists need MBAs? Did you see this report that just came out about how many people who are managing directors have either, it's Stanford, Harvard, or MIT? Like if you take all the people in venture who have an MBA from Stanford, Harvard, or MIT, it's like more than 50% of the managing directors have an MBA, and an MBA from only one of 3 schools or something. Like it was a remarkable sort of thing. Now, is that cause or effect? I don't really know. But so to me, I look back and I say it was a valuable thing to do, but at the time I did it, it ended up being so not valuable for starting a company that I actually wrote an article in Stanford Business School magazine about a year after I got out, and the article was basically, that degree was completely useless for me. And they had heard me complaining about it, and they said, okay, well, why don't you write an article about all the stuff you didn't learn going to Stanford Business School? And I remember this because it was very funny, because I remember writing this specific line. I said, yeah, we spent a bunch of time learning about the Black-Scholes capital asset pricing model. This is not something I use in my software startup. Well, the funny thing is now I'm a public company director, and I actually have to know what that is. And so only 30 years later did it become valuable to me. I don't have those notes anymore, but I can look it up on the internet.
Hello, I'm Michelle, and I'm an entrepreneur. Thank you for your comments tonight. Thank you for coming. When should an entrepreneur approach an investor they might want to work with? Is it before they're fundraising, or only when they're ready to actually fundraise?
Well, so I'll just speak for myself. I'm a huge fan of, I don't like sort of the shotgun wedding approach. I actually like to invest in people that I know I want to work with. So, if I can meet someone early on in the process, feel like I know what they're working on, feel like I have an inside shot to knowing when they're going to be raising money, and can sort of be in advance of that so that it's not a hurry up from behind and get everything done. I really appreciate that. But it's, as I think we've discussed, timing financing and funding is really hard. And so oftentimes you're catching up as opposed to getting out in front of it. Anyway.
Yep. Agreed. Love to meet people who aren't actually raising right now.
Hi, I'm Melinda. And you spoke a little bit about the work-life balance, and I'm a woman and I'm planning to have kids. How does that work? I mean, you all have kids, and yet no time for honeymoon. So I'm just wondering, what am I really in for as an entrepreneur?
When my daughter was about 6, she got really mad at me. No, she wasn't even 6, she was about 5. And I came home and she was super mad at me, and she put her little fists on her hips, and she said, well, if you weren't going to spend time with us, why'd you born us in the first place? And it was a wake up. I mean, it was a real, and like when you go to kindergarten, it says like, what are your mom's hobbies and whatever, and it said, what's your mom's favorite hobby? And my kid wrote email. And it was like, okay.
Yeah. Well, so first off,
and that's Heidi's answer.
Yeah.
No, that's my answer. No, I'll say more, but my answer is it's hard. There's no such thing as work-life balance. Some people now call it work-life integration. I like that. To me, it's like my friends are my, whatever. Yeah, I wish. A lot of my friends are people I worked with. My kids came and did stuff with me. I mean, now my kids are 18 and 20, and they both turned out, I think, pretty awesome. And they both have said to me, I really respect that you did what you did. But there were moments like when I didn't show up at soccer, and I wasn't the parent who was always the one who was there. I made trade-offs. Like I told the school, I'm only volunteering when it's a kid-facing activity, right? If my kid knows I'm there, I'm doing it. I'm not working in the back office. I'm not working on the auction. I'm not doing I'll just write a check for that other stuff because I was famous as the mother who actually said this after a few glasses of wine, is like, can I just write a check in for like the whole year? Like, I don't want to buy the bake sale. I don't want to have to go buy the canned food for the drive. I just would like one check. Just tell me what I got to do and I'll do that because it's just, I'm efficient here. So that wasn't well received. But I think, and I'm doing exactly what you're doing. I hauled my kid to things, right? I hauled her to one, I have to tell this story because it's too funny. The year Al Gore had An Inconvenient Truth, and he was getting he was nominated for Oscar, right? We're sitting there watching the Oscars, however long ago that was. So my kid was pretty small, right? And we're sitting there and we're watching people on the red carpet going to get the Oscar, and Al Gore and it was like Steve Jobs walked up. I'm like, oh, there's Steve Jobs. We know Steve Jobs. And then this other guy walked up that we knew, and then Al Gore walks up and she goes, there's Al Gore. I know him. And I said, yeah, well, he used to be the vice president. She goes, no, Mom, I know him. And she's like 9, right? I'm like, honey, you do not know Al Gore. And she says, yes, I do. I've chatted with Al Gore. And I'm like, no, you're 9. You don't know Al Gore. And she said, yes, one day I was sick and I was home from school and you dragged me to some speech you were giving. And I was a speaker on the same panel that day. Al Gore was the lunch keynote and I was on right before him. And she sat in the front row and Al Gore sat next to her. And she had a nice little conversation with him, never bothered to tell me that until... So I think part of what my kids have learned is, you drag them to things and you do stuff and you make it work. Now, the other side of that is I'm divorced. So you can also argue and say, well, I guess I didn't do the right things in my marriage. And, again, we can all, with more alcohol, we could talk more about that. But, I can definitely look back and say, okay, I recognize the importance of putting something together for my kids. And I think as a mom and a mother to daughters, I had a better picture for that. And unfortunately, on the marital side, I think it was like, well, as long as I'm working and I'm making a bunch of money and I'm, doing all that stuff, I don't have to worry about other stuff that I probably should have worried about. So, cautionary tale on that side.
So I think what you're hearing is we could go for hours on this
Yeah,
topic.
I know, that's the right
because it's something we all wrestle with every day. I think the first question I had was, I knew I wanted to be a mom, but like, when's the right time? And if you ran the numbers, you'd realize it would never make sense. And I love telling the story about Merritt, my eldest, who is here. I actually had her when we were in the middle of the first product launch of the company that I founded. And just to sort of say that there is never a good time. You can never say, oh, well, I'll just wait until this is done or that's it. There's never a good time. So if you're going to have kids, just have kids and it all works out. The other thing is that I remember when Merritt, I'm going to use her as my example here, but in kindergarten, Merritt was like, Mom, why are you never in class like all the other moms? And I'm like, rather than feel guilty about this, I was like, hey, well, you know what? I actually have a really cool job and I love what I do. You just need to see it. And so that's when I sort of got this inspiration around, hey, well, I have candy in my office. Why don't you come visit me on Fridays? So literally, Merritt would come and visit me on Friday afternoons and hang out in the office. And it sort of became a whole different level of parent-kid bonding that, so, for me, making it work was, look, I know I'm not going to be at school. I know I'm not going to be there after school for homework, but we're going to have this other special bond, and we're going to really take that as far as I can possibly take it. And so Merritt has come on business trips with me and hung out in the, lobbies of companies that I finish a board meeting, and she's like befriended half the company. And I'm like, all right, hopefully there's some cool skills coming out of that. But what I really want to impart on her, and this is what I care most about, is that she knows that, she's empowered to do whatever she wants to do when she grows up, and she can choose to have a cool career in tech, become a coder, do all sorts of things. And I think modeling that behavior is the best thing that we can do for our kids. So that doesn't really address the how do you balance it all, but I think part of it is how do you pull it together and integrate it in a way that at least gives me some comfort that I'm doing the best I can.
I'll just add one thing, as Cheryl the Great would say. I don't know if you haven't read Lean In, you should. It's fantastic. And she talks in the book about how the biggest career decision that women will make in their lives is who their partner is. And I totally think that is true.
Yes.
And so I have 3 kids, and my husband is a CTO of a Series A stage company. And so it's like a little cuckoo, but I think he feels the pain as much as I do. And like that may or may not work out. Like may or may not be the right calculation for the long run, but like he is a very good partner, and I expect that of him. Like I cannot do it all, but I mean, I at times I do all the planning, all the shopping, all the vacations, and it's like really, really tiring. And so I basically, like, I made him read. Well, he actually said he would read Lenin, so I didn't really have to make him. And like halfway through, he was like, you know, you can ask me to do more stuff. And I was like, oh, really? And so like, okay, here you go. And it's actually it's good. Like he shares it with me, but it's really important. I think I also went to business school. The majority of my female classmates are not working.
Same here.
And I think a lot of it is like a lot of them married people who men make more money than women, as we know, and the guys made money and put pressure on the women not to work, or the woman was doing something that she didn't love. And as you get more senior, it gets more political, and you have sometimes more bad days than good days. And so you start to think about like, my boyfriend or my husband's giving me pressure, and I don't really like my boss. I'm gonna quit.
Yeah. Or you do the immediate cash flow analysis, which is I'm pouring more money into daycare than I'm making without doing a discounted cash flow of future earnings.
Right, exactly. Exactly. So I think you have to do what you love. If you're not married yet, like, you know, if you're going to be with someone, make sure that you check them out in terms of whether they're going to be really supportive of you if you're planning on working.
So cautionary tale on this also. So I worked the whole time, and my husband was very supportive of the fact that I had a high profile career in work, and he was supportive of that. But he was also a traditionalist, and he expected me to do all the kid stuff, right? Now I could hire help to do it, but he wasn't going to do it. Now he's a surgeon, and you know, you'd get up in the morning and some 4-year-old would have a runny nose, and he'd be like, well, I got someone out on the slab at the hospital who has cancer. What have you got going this morning? And I can guarantee whatever I had going this morning was not as important as someone on the slab with cancer. So he always won, and I always did everything. And there's this great book written by another friend, two women, called Getting to 50-50. And I highly recommend you read it. And it's all about, you have to make your husband do more. I finally, like one time, 7th grade, it was back to school night. I had a business trip. I finally said to him, you have to go to back to school night for me. I can't do it. He went to the wrong grade. And that's not a joke. And that was my first indication that he really wasn't that clued into our children. And I will tell you, after the divorce, he's had a hard time connecting with our kids because they don't perceive him as the one who was there. And so I just say it as a cautionary tale. I think you need to push, because societally we sort of accept that women do this stuff and men don't do this stuff. I don't know about you guys. I was the only female partner at Mobius, my prior firm. On the first day of school, they had a partner meeting. Every other partner had a non-working female spouse. And I said, I'm sorry, I'm out of here. It's first day of school. I got to go do the locker and the cubby and all that stuff, right? So I just encourage you to push your spouses to share the load.
So my name is Dipti, and so this is actually probably a good segue to the question I have, which is, what is your take on investing in a husband-wife team, founding team?
I think most investors have stories that are like really bad about investing in families. But if you look at the founders of House, they're a husband and wife team, and I would certainly be happy to be an investor in House.
Yeah, I think it really, there are actually a lot of great examples of successful companies that started as family businesses. I think even Amazon actually anyway, there's a bunch out there. I think the issue is not so much when they go well, it's what happens when they are not going well. And so it's really, I would say just there needs to be extra checks and balances in place that if things don't go well, there are ways to maneuver around that. Yeah. Yep.
I think when people get really passionate about what they're doing and then they end up getting married, it's a really different scenario than when someone starts something and they decide to employ their spouse. And usually those don't turn out as well. And I think in marriages, most marriages have an imbalance in power. And in entrepreneurial relationships, there is an imbalance in power. And when that's in the wrong direction, when it's mismatched, it can really create problems.
We just have time for 2 more questions. So.
I'm Anastasia, and we read a lot about how women have to work so much harder and make less and present ourselves more. Are there ways we can capitalize on being female?
Yes. Yes. I mean, first of all, and in fact, this is sort of changing, and I'm happy about this, but I used to say, hey, when I go to a meeting, I'm the only woman in the room, so I'm going to get heard. If I raise my hand, my question's going to get answered. So I think part of it is that. I think also supporting each other. I have my group of homies, like I call them my fave 5, you know, my women that we get each other and we share lots of stuff with each other and we really help each other out. And we don't have a business relationship. I mean, one of them, Ann Windblad, she was founder of Hummer Windblad, and she was my Series A investor. But she and I haven't worked together officially in a million years, but we bounce things off each other all the time. So I think women are more collaborative and are more willing to be open and share with each other. And I think being able to support each other is great. I think women are great communicators. I think a big part of my job is I work behind the scenes to make like this CEO thing today with the circus, where I have to go around, call everybody, and kind of get everyone to get together, because I think generally speaking, I'd say women are much better about managing their egos than men are in those situations. So I do think we have some natural attributes that really work for us. I think even anyone who's a mom, I always love moms because they know how to prioritize. Like, you walk in the room, you go like, okay, who's bleeding? You know, but you know, so I do think that we have skills that work to our advantage.
I just wanted to quickly say before I let Aileen go, who has the most to say, but I think, you know, I love to embrace something where like there's an underrepresented point of view, embrace it, own it, and just make it your power alley. And I think there's a lot of opportunity to do that. And Aileen's done some particularly awesome blog posts on this. So
I think women are the economic engine of the world. And I have to admit, like, there's a little something that kills me that Zappos and Zulily and Twitter and Facebook were all founded by guys. Like, what? Like, I hope that at least some of you in the room are going to be the pioneers of the next generation of the big communications platforms, photo sharing, commerce, transactions, services. Like, women are the people who pay for all that shit. So like women should be founding because you understand the market and the customer need and the opportunity to innovate better than anybody else. And so that is what I'm waiting for.
Hello, good evening. My name is Bianca. First and foremost, thank you so much. This is by far one of the best panels I've been to. Just your transparency was like super helpful. So I thank you guys for being super honest about your experiences. So the environments that you work at are very male dominated, but I think as people looking to flourish in your career or at a company, it might not be as clearly defined like, oh, at a VC firm, look for this in terms of culture. So what would you say have been like key factors in your environments that have allowed you to really flourish in your role? And like, what should you look for if you are interested in like, you know, working at some of these firms? Like, what are key factors that have kept you guys successful in your roles? So that's my question.
I think you just know, particularly as I now do some public company, corporate governance, you know when you're being looked at because it's a token and you have to check a box versus, you know, when someone actually really thinks that you could do a job that they need done. I think you can sense it in the interview. I think you can sense this is the trust your gut thing. I mean, you walk into places. I remember there were some VC firms. I didn't walk in to interview, but I was walking in to raise money, and I thought, from the moment I walked in the door, I thought these people are not going to fund me, and they didn't, right? And I think it's no surprise that my Series A was led by a woman, and my Series B was led actually by Tim Draper, who had lived in the same freshman dorm as me and knew me very well and knew I was very motivated. So I don't know. I think it's really hard to change cultures. I think every one of these places has their cultures. I think there are a lot of VC firms that have extremely male-dominated cultures where just I wouldn't even try. I just wouldn't try. And you know, it's you feel it when you get in there. So I think you have to be sensitive to what it feels like to be in that culture. And spend enough time interviewing, right? Spend enough time with the people who are going to matter to you. This is another mistake I think people make is when you're not in control of the interview situation, you only meet with whoever you're told to meet with and you get the job offer. And it's kind of weird to say, could I meet the other 7 people I'm going to work with before I decide? But, you know, when you're raising money, I think it is okay to say, could I meet your partners? Could I meet the other people you'd accept? You know, it depends on who you're going to work with, because the vibe, I just trust your gut, trust your gut, trust your gut is how I'd answer that.
So thank you so much to our speakers today. This was a fantastic panel. Thank you very much to Rose for moderating this panel this evening.
Yeah, great job.
We had several volunteers here today to help you get up in the correct space. And again, thank you very much to Yelp for hosting and sponsoring this event.
And do you guys have our email addresses? No. Okay, so I'm Heidi@dfj.com. Feel free to email me. Happy to get emails.
I'm Aileen at cowboy.vc.
And I'm Trey, Trae, at KPCB.com.
Aileen is AILEEN at cowboy.vc.
Oh, that's a cool one.
I know, I think it's like Virgin Gorda, right?
Yeah, it's cool.
Someplace very far away. Some unstable country.
Yeah.
So we're going to break out now, and you can go back and have more refreshments for the next half hour or so, and network. Meet that one person.
Hi. Yeah, how are you?